And it's a terrible mistake to think you have to have an opinion on everything. You only have to have an opinion on a few things. In fact, I've told students, if when they got out of school, they got a punch card with 20 punches on it, and that's all the investment decisions they got to make in their entire life, they would get very rich because they would think very hard about each one. And you don't need 20 right decisions to get very rich. 4 or 5 will probably do it over time. So,
hey, it's Tom here and welcome back to the channel. So as some of you may know already, that clip on punch card investing from Warren Buffett is one of my favorite investing analogies. A lot of people have an increasingly sort of short-term focus when it comes to investing. They want to buy in and out of stocks and trade very frequently, and they want to invest in meme stocks and try and get rich next week and all this crazy stuff. And I think in many cases it's kind of hard to get people across the line these days with long-term investing. So in this video I want to basically go through some of my favorite investments ever from some of my favorite investors. I'm going to go through 5, and these are all basically long-term investments that have really moved the needle for these people. So, Buffett mentions in that clip that if you make 20 investments in your lifetime and you're only really right on 4 or 5 of them that work out great, that is more than enough to get you to financial freedom over time. So this video is going to be kind of some of my favorite investment stories and a few of the stocks that have made people extremely wealthy by just buying them and holding them for a long period of time and letting those investments ride and compound. But before we get into that, we do have a sponsor for today's video, and today's sponsor is Hatch. Now, Hatch have been my personal broker of choice for me as a Kiwi here in New Zealand, making all of my US investments. Now, before Hatch was around, I was dealing with one of the big banks, which, I had to get on the phone and call them to make trades, which is really not the modern way of doing things, and I also had to pay very high fees as a result. So since Hatch have come into the market, they've been a real game changer for me in terms of just convenience and also saving money on fees. They have a really simple, easy to use brokerage platform, and I can buy and sell shares for as little as $3 US, and those same trades were costing me as much as $90 US previously with one of the big banks. So for that reason, I am a big fan of Hatch, and Hatch have kind of continued to improve the platform over time the more that they've grown. And one of the recent additions that they've made just this year is the introduction of kids accounts. So you can now set up investment accounts for your kids, have them take advantage of the power of compounding and long-term wealth creation from a very early age. We all know that the longer you can have money invested and the further you can sort of roll that snowball down the hill, the larger snowball and larger kind of nest egg, I guess, you end up with at the end. So if you want to set up an investment account for your kids through Hatch with even lower fees than the traditional Hatch accounts, or if you're interested in checking out Hatch in general, you will need to go to the link hatch.as/investingwithtom. If you go to that link, sign up and start a new Hatch account and deposit 100 New Zealand dollars into that account, Hatch will give you a free $20 top up so that you can get started investing with a little bit more money. Now, this wouldn't be a Buffett-inspired long-term investing video without giving actually an example from the man himself, from Warren Buffett. And when I was initially planning out this video, I was actually going to take kind of a different spin on things. So I've heard Buffett and Charlie Munger say things like, if you look at the long-term investment record of Berkshire Hathaway, it's really good. They've built massive reputations for themselves as some of the best investors to have ever lived. They've built massive wealth for both themselves and for their shareholders. But if you were to take out maybe the 5 or 10 largest decisions ever made at Berkshire, the record would be pretty mediocre. So although they've had exceptional returns for a long period of time, there's really only been a handful of things that have really moved the needle for Berkshire Hathaway. So that was the initial spin. I was going to kind of do some numbers on, what would Berkshire look like if they never bought Coke, or they never bought Geico, or they never bought Apple. But I've decided to take a slightly different spin on that now and give you examples from a few different investors. But nonetheless, we will start with Buffett, and the example that I want to give is probably the biggest investment win of his career. Perhaps not in terms of percentage gain. He's certainly had a large number of investments that have gone up in a larger percentage than the example I'm about to share. But in terms of the absolute amount of dollars made, really nothing beats out his 2016 investment in Apple. Now, I'm sure this is a story that many of you have already come across and already know, but just to give you some of the details, back in 2016, Buffett started buying a quite sizable position in Apple. At the end of him sort of acquiring his shares, he invested about $36 billion into Apple, which is one of the largest, if not the largest investment that he has ever made in a single company. And if we fast forward to today, through to 2021, and look at Berkshire Hathaway's 13F, that holding is now worth over $120 billion US dollars. So it's been a massive multi-bagger for Buffett and for Berkshire Hathaway, and it's super impressive to have done that with that larger amount of money. You know, lots of smaller investors can kind of dance in and out of smaller microcap stocks and maybe have really good returns as a result. Certainly that's what Buffett was doing himself in the earlier days. But to do that out in plain sight with one of the biggest companies in the world is pretty crazy impressive to me. So Buffett has made about $90 billion off of that investment, and that's before even including like dividends and some of the money that he's taken off the table with actually selling a little bit of Apple as well. And just to give you a feel for how much that does actually move the needle at Berkshire, this is a slightly complicated equation because you've got the dividend income, he's sold a little, you've got now a big capital gains tax liability if he were to sell these Apple shares. But my rough maths lands me on about $50,000 to $60,000 per share kind of added to Berkshire Class A shares just from that Apple investment. So, the current share price is somewhere in the $400,000 range. By my estimate, probably $50,000 or $60,000 of that value in Berkshire has come from the Apple investment in only the last 5 years. So at 91 years old, or I guess 86 years old when he made that investment in Apple, the man still got it, and it's crazy impressive. So that is the first one. The second one I want to talk about is actually an investment in Amazon. Now, Amazon, we all know, has been one of the most successful stocks kind of the past 20 years. It's had like ridiculous returns. If you had bought it in the early 2000s, you would be super wealthy almost regardless of how much money you actually put into that stock. But we really don't hear a lot of stories about people that actually went and did that besides, Jeff Bezos. There's not a huge number of people that bought Amazon in the early 2000s and have just kind of held on to it. But there are a couple, and I want to share those two people kind of in this video. So the first one is Nick Sleep. Nick and his partner Zach at Nomad over in the UK had a phenomenal track record through their investment partnership, and a lot of that was explained by Amazon. They bought Amazon in the early 2000s. They wound up their fund in about 2014 and continued to hold Amazon personally. And by the time you got to about 2018, Amazon was like 70% of their net worth. So Zach actually chose to hold on to that full Amazon position. Nick ended up selling about half and shifting that into another stock called ASOS over in the UK. But nonetheless, just absolute home run, and that most certainly moved the needle for those guys. So Nick Sleep's the first one. We actually have a second one, and that is Bill Miller. Now, this is a topic that I covered with William Green, the author of Richer, Wiser, Happier, which, if you haven't seen that podcast episode, I have recently started a new podcast channel, the Investing with Tom podcast here on YouTube, so definitely go and check that out if you haven't already. But Bill Miller has a very long track record of investing in Amazon. Now, at sort of the peak, I guess, pre-financial crisis we're talking here, Bill Miller and his fund owned 15% of Amazon. They owned a massive chunk of the overall company. Unfortunately, Bill Miller's fund had a really rough run through the financial crisis, and he was sort of a forced seller of Amazon at that time because he was getting so many redemptions out of his fund. But through the financial crisis, he not only held his Amazon stock personally, but he was buying more, and he was also buying call options on Amazon to try and sort of juice up the exposure that he was getting to that particular stock. And if you fast forward to today, Bill Miller's Amazon position is a huge chunk of his net worth, and as far as we can gather, Bill Miller is actually the biggest investor in Amazon, the biggest shareholder in Amazon that doesn't have a surname Bezos. So if that's not a crazy story of investment success, I don't quite know what is. Now, the next one on the list here is an investor who probably isn't as well known as the first few that I've talked about, and that's a guy by the name of Cliff Sosin. Now, Cliff Sosin runs CAS Investment Partners. He has a relatively short track record, but nonetheless, it's one of the best track records I have ever seen. So last update that I've seen, which I think was late 2020, he'd been compounding in his fund at 37% per year. And one of the big reasons that he'd been able to do that, he'd made a handful of really good investments, but there was one that really jumps out that has moved the needle massively for his fund, and that is an investment in Carvana. Now, Carvana was a stock that Cliff Sosin first started buying in the first quarter of 2018, and he's held it and actually added to it since. He's kind of consistently been adding to most of the stocks in his portfolio as he's got new money kind of come into the fund. And from that initial purchase in Q1 2018, Carvana has gone up 14x. So it's been a crazy home run for Cliff Sosin, and that really does explain a lot of that 37% a year return that he's managed to get. But he's been willing to hold it, and he's even been willing to add to it, and I think that is super impressive. He has a very concentrated portfolio, and Carvana alone now makes up about 40% or so of his fund. So really just goes to show that you don't need a massive number of winners in an investment portfolio if you can find a handful over a lifetime, or if you can find even one or two that work as well as a Carvana or an Amazon or something, that will definitely get you to the promised land. So that is the next one from Cliff Sosin. Next one on the list is actually one from Guy Spier, and this is one that certainly worked really well, and Guy Spier made a lot of money on this investment, but it could have worked even better, and I will kind of get into some of the details with that, because it's one that Guy Spier has been pretty open with in interviews in the past, and you can dig through some of those older interviews and kind of find some of the details on this. Now, the investment I'm talking about here for Guy Spier is in an Indian company by the name of CRISIL. Now, CRISIL is almost like an Indian equivalent of something like Moody's in the US. So they're a credit rating agency, and Guy Spier bought into CRISIL on a couple of different occasions. So they've had some stock splits and things, so I'll try and talk in sort of split adjusted terms, so that makes a little bit more sense with the current sort of stock price if you were to look at it. Now, Guy Spier first purchased into CRISIL split adjusted in late 2001 at about 12 Indian rupees per share. So he bought at 12 in 2001 and actually continued to buy at much higher prices a few years later. So if we fast forward through to sort of late 2004, he also purchased into CRISIL at about 55 Indian rupees per share. So between 2001 and 2004, he'd already captured about a 5x on that investment, but still felt that it was attractive enough to warrant not even selling, but continuing to buy into CRISIL. Now, as far as I can tell from previous interviews and so on, it looks like Guy Spier sold CRISIL somewhere just before the financial crisis. So probably in the 300 to maybe 350 rupee per share range. So if you look at it in those terms, that is a massive home run for Guy Spier to make an initial purchase at 12 and eventually sell at 300 or 350, then make another purchase at about 55 and again sell at 300 or 350. That is a really successful investment that will, move the needle for most investors, that is for sure. But it's really interesting now to hear Guy Spier talk about the investment in CRISIL actually as a mistake, or at least the selling part as a mistake. He says in older interviews that one of the dumbest things he's ever done is he woke up one day and felt that he'd made enough money in CRISIL and ended up selling it. So like I mentioned, he bought at about 12 and about 55, then sold at 300. If you look at the stock today, it currently trades around 3,000 Indian rupees per share. So if he were to hold on to that initial investment made at about 12, that's like, I don't know, a 250x, a 250 bagger over about 20 years on the first purchase, and like a 50 bagger on the second purchase. So yes, he got a phenomenal return from that investment, but it could have been like out of this world kind of returns if he had continued to hold it. Now, the final investment that I want to talk about that has really moved the needle for this particular investor is one that is a little bit more obscure, and this isn't, I guess, the type of thing I generally talk about on the channel, but I found the returns that have been generated so impressive that I thought it was worth the share. So this is by someone who, if you're on the sort of finance Twitter world, you may have heard of before, but outside of that, I don't know that he is particularly well known. And that's a guy by the name of Thomas Braziel. So I first came across Thomas Braziel, one from Twitter and two from his appearance on Bill Brewster's podcast. So you may know Bill Brewster from the Value After Hours podcast with Toby Carlisle. He has his own podcast called The Business Brew, and he ended up interviewing Thomas Braziel. Now, Thomas Braziel, I would say, is a value investor that focuses on sort of distressed situations and bankruptcies and sort of special situations more generally. And the investment that I'm going to talk about in this case is sort of value investing / distressed situations / a special situation actually meets cryptocurrency, which might sound like a kind of strange thing for me to talk about and a strange thing for a value investor to look at, but I'll kind of walk you through the situation. So this was an investment that Thomas Braziel made back in about 2015. So in 2015, there was a cryptocurrency exchange by the name of Mt. Gox, which was one of the largest, or if not the largest, exchange for cryptocurrencies in the world at the time. And Mt. Gox actually underwent a massive cybersecurity hack, basically, and the company ended up going bankrupt. And Thomas Braziel kind of read about this in the paper and came across the opportunity to kind of buy claims in that bankruptcy. Now, if you want to hear the full story on this, go listen to Bill Brewster's podcast, but I will give you the highlights here. So effectively what he found after kind of digging into this sort of bankruptcy and the special situation is that he could effectively buy some of the Bitcoin that would eventually get distributed out to the people that bought claims on this bankruptcy. He could effectively buy Bitcoin, which in 2015 was worth about $300 a coin. He could effectively buy it for about $80 per coin. So there's a couple of kind of caveats to that. This was going to take, he thought, about 3, maybe 4 years to kind of play out. So the bet basically is, you're buying something that is maybe worth $300, it cost you $80, the 300 or the price of Bitcoin is extremely volatile. So that 300 could go up a lot, could go down a lot, we don't quite know. And you have 3 years to kind of wait for this to maybe play out. But the margin of safety, I suppose, is in the gap between the current Bitcoin price, at least back in 2015, and what the price was that you're effectively buying it for through Mt. Gox. Now, this has taken a little longer to play out than expected, so it's looking like this might finally kind of play out here in 2021. So more like 6 years as opposed to 3 or 4 years. But as many of you all know, the Bitcoin price has gone up a hell of a lot since 2015. So Thomas Braziel, as far as I can understand, his fund put a few $1 million into this particular situation to effectively buy Bitcoin for about $80. Bitcoin is now worth like $57,000, $58,000, something like that per Bitcoin. So needless to say that, a few $1 million has multiplied into a massive, massive sum of money. That few $1 million that was invested into this particular situation is up maybe 600, 700 times, 700 bagger, something like that. And you really do not need a lot of those in your lifetime to get very wealthy very quickly. So that's a bit of a more obscure one to kind of finish up with, but I thought it was a really interesting story. I'm not a cryptocurrency investor or anything like that, but I can admire the deep value kind of special situation aspect of that for sure. So those are 5 of my favorite long-term investing stories that have really moved the needle for each of the investors that I spoke about in the video. So if you did enjoy it, please hit like and hit subscribe. If you're interested in the Hatch offer, you'll need to go to the link hatch.as/investingwithtom. But that's it from me for this one, and I will see you in the next video. Cheers.